Welcome to the ETF.com video series. My name is Dave Nottig, Managing Director. I'm here at Inside ETFs with Jillian DelSignore from JP Morgan Asset Management. Thanks for joining us.
Thanks for having me, Dave.
So big year for JP Morgan. I think $15 billion in flows puts you at number 4 in the asset gathering this year. What was working? What's the story?
It was such a great year. We're so proud of what we've been able to do this year because it happened across the suite. So if you think about the way we've constructed our ETF lineup, it really has been the way you would think about constructing a portfolio. We have exposures across equities, fixed income, on alternatives. And this year, we were able to actually expand that across different disciplines. So you had purely active, you had factor-based, and now market cap weighted beta. So if you look at where we were able to generate flows, JPST is something I would think about. Active fixed income.
And very short-term active fixed income.
Very short-term active fixed income. Started the year at $100 million, ended the year over $5 billion. It was a way for advisors and institutions to really pull in duration where they were starting to feel uncomfortable in fixed income, wanted to pull in duration. If you think about JPST, you're able to capture 70% of the yield of the ag for about 10% of the duration. So for us, it was a really compelling solution, even more so that it was constructed off of a team that manages over $600 billion in global liquidity assets. So this was not a bond manager coming down the curve. This was a very conservative money market manager going a little bit out of the curve.
So are people using that as a cash vehicle, like a money market fund or a sweep account, or is it something different?
No, it's actually one step out from cash is how we talk to clients about it. What they were doing was bringing in duration. You were able to capture 70% of the yield of the ag for 9% of the duration. So it was really a compelling story for advisors who were trying to pull in duration and not lose that yield. Not to mention, the story was so strong, it's run by our $600 billion global liquidity team. So as advisors were looking for something to implement with, they were very confident in the ability of this global liquidity team to manage this part of their portfolio.
And I have to imagine that looks like what your institutional clients must have been doing to deal with a rising rate environment too. The flattening of the yield curve let them pull those durations in.
Absolutely, and you know this, being in the business as long as we've been in the business, it's all about sort of flows on flows on flows. It becomes this snowball rolling downhill. Once you start to see assets come into the fund, then you start to see the larger trades.
Right,
institutions become interesting, and then 1 billion turns into 2 to 3 to 4 to 5. And so we were excited that the asset base of that product now is really running the gambit from very retail to very institutional.
This was also a big year for your Beta Builders product,
Yes.
which I have to say a lot of folks in the press, like us, really covered that as a fee story. You came out with things like your Japan fund, which really dropped the expense ratio bar on that sort of traditional market cap weighted space. Is it just a fee story, or is there something else going on there?
No, so I mean, if you think about the way that JP Morgan's ETF lineup has evolved, we've built our products off of existing JP Morgan capability. And somebody who doesn't really necessarily know might look and say, JP Morgan market cap weighted beta capability, what? We actually manage over $25 billion in market cap weighted index product. So this was our ability to take that capability and use our scale to disrupt a part of the market that we felt could use some disruption.
So talk to me about 2019. Obviously a lot's going on in the markets. What's going on at JP Morgan? What should we be looking for? Or what are you showing here at the conference?
Yeah, here at the conference, we're really excited. Fixed income, right? It's a very complicated part of advisors' portfolios, and it's not getting any easier with the fluctuation in rates. So we've actually launched a whole host of fixed income products from JPST that we just talked about on the ultra short side of the curve to core products. We have high yield, emerging market debt. So we actually have the ability to help advisors thinking about constructing a fixed income portfolio. So for us, it's thinking about portfolio construction in total. So we have a tool called Portfolio Insights. And it's you have all these products out there, all these tools in the toolkit, but how do they thoughtfully construct a portfolio? So for us, it's about thinking about how do we bring all those tools together and help advisors build stronger portfolios.
Right. Breaking out of the one fund model into really thinking about whole portfolios. Yep, and that's what we've seen in the advisor community too, so that's great. Jillian, thanks so much for joining us. We hope you'll join us for the rest of the video series here at Inside ETFs.